Hello traders and investors, I'm LA Little and this is your weekly NeoTA wrap. We take a look at these markets and we do it from a neoclassical perspective. Each time we're asking ourselves one question, and that is, what happened last week? What does it tell us about the coming ones? I do a show every Sunday evening, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel LA Little. If you haven't subscribed and you want to, just reach up in the right hand corner of your YouTube window and hit the subscribe button. As far as what happened last week, gains across the board, 2% on the Dow. NASDAQ barely ekes out a gain, 1.5 on the others. So you're down still pretty hard on the year, but that's 2 weeks in a row that they've been able to turn in some positive numbers. If we take a look at the Friday quotes, right, you had a nice big spike up across the board, all over the world, right, 2.5%, 3.5%, and this all came on the heels of the Bank of Japan. We go to negative interest rates, NERP, right, negative interest rate policy. You already have it in Europe. You got some countries over there charging an arm and a leg to loan your own money out. And it's Bank of Japan's time. They've decided that maybe this is the way to go. So they stuck as much money into the system as they can. Now they're going to force the banks to loan it. Or at least that's the idea. Problem is there's no good data out there that shows that that will happen. Yet market gets all excited because why? Because the bankers come to the rescue, the central bankers. And kind of threw these markets back the other way. They were oversold. You had a nice big bounce as a result. So what does that do to the charts? Well, it creates saves right on the monthlies. You had 4 different monthly charts that were ready to break down. 2 of them in the sectors, 3 of them in the sectors, and 1 in the indexes. You actually had some tests going on elsewhere, but they close them up pretty good, right? Here's the monthly S&P 500 volume here as it touches into this bar, right? So that's the October low, 2014. You test into it, you have slightly less volume, right? So slightly less volume. Test underneath, so you get underneath that price point barely, and you test it, and you don't have enough volume. What do? You flip it around, you take it back the other way. Does that mean this test is over? That means everything's done? No, not at all. You left volume down here, almost the same amount of volume. If you look at the numbers, 924 over here, you had 946. So you're doing about maybe 1.5%, 2% less volume, but you're hitting it pretty hard again. It tells me this is not over. This is going to continue. If you back it up, look at the weekly, you got an under over, but you left volume at the bottom. And you bring it back to the daily, you saw the nice big spike up. What does that do? Well, that puts an ABCD structure in place. That was the one we've been watching, waiting to see if it was going to fire or not. I pretty much gave up on it, but then Bank of Japan bails them out. Measures up another 1.5% or so, and that's in place now. Bullish structure on the ABCD side for the NASDAQ, the S&P 500, the Russell, the Dow, every one of them. They all have it now. You can see it here. Each and every one has pushed over the B point now and is trying to make the run. Now, all of them are going to have to push back into these big bars. Those were the breakdown bars, or at least the last big breakdown bar. And up above that, if they make it there, they've got bearish retest regens waiting up above. These are high percentage sells in case you're interested. As far as what else happened, so that's those. Let's go to the Russell, because the Russell is the one that broke down. I'm going to pull up the monthly chart. You can see it here. Volume expands, not enough to get underneath there and stay under it. It does expand. It almost gets down 2 swing points, flips it around, closes, but closes under. So that's a break. That's what that red arrow is. And matter of fact, starting tonight, I'm going to start talking about some of the tools on TA Today, little short segments each night, just to get familiar with what we're looking at when we're looking at our charts, when we're looking at our various trend signals and so forth. We'll do that here in a second. So if we move around the world, take a look at the world markets, and pop over there. I'm going to start with Europe. I'll start with the DAX. Now, the DAX was interesting because the DAX couldn't even get back over the B point. DAX is still hanging down here. You know, I know in classical, stuff, this would be kind of like a triangle, or not triangle, but a diamond pattern, and that's, everybody loves this kind of stuff still. one of these days they'll wake up and realize that there are some better processes and procedures, models, if you will. That says that this thing in the direction of the trend should break, go to the high side. That would be up here. That's the ABCD structure. Why complicate it? Just use one thing. You don't need 15. They all tell you the same thing. Just measure where supply and demand is and then use that to make decisions. As a matter of fact, the A point to the B point is there. Here's your C point. And there's your ABCD structure right to the swing point high. Volume so-so. It looks like they'll try to do it because everybody else is doing it. If you look at the CAC is already doing it. So if you pop over there, you can see it. Let's see here. Yeah, here's the ABCD structure on it. And so you can see it. And you've got this around the world pretty much. Everybody's doing the same thing. They're all making their runs because they're moving in concert again. If you look at the weeklies tested into the lows, didn't have enough volume. That was true on the CACs, on the DAX. Same thing on Europe in general. If we move over, take a look at Hong Kong. Let's go to Asia. Now, Asia, also ABCD structures here. If we're looking at them on a weekly, on the dailies, ABCD structures to take it up, right, back into the swing point high. But the real problem here is you got some serious breakdowns. These guys are going to come up and start doing bearish retest regens. And again, as we do some of the theory stuff, you'll learn what that really means. And I'll try to sprinkle some of that in as we go through the charting and the model, the NeoTA model. So anyway, Hong Kong, Shanghai, all of them, same thing, right? Bounces, or at least the others are bounces. You don't have it here on the Shanghai. Matter of fact, we lost all of our volumes for some reason. We'll have to get those back in there. But the Shanghai essentially is hanging at the lows. They can get a little bounce, but there's not much else going on. Let's look at the bigger picture here. On the Shanghai, break of a swing point low. They're going to come back, try to do a retest, and try to regenerate back to the downside. Of course, Japan was the highlight last week on Friday because of our kamikaze QE that's taking place over there. And so Japan gets a nice big bounce. What do they have? Same thing. ABCD structures to the upside. Got nice big volume. They'll probably see some carry through. Whether it's immediate or afterwards, it doesn't matter, but it's probably going to carry through. And if you look over here, you might not get it immediately because if you go look at the yen itself, the yen, as it got that big spike down, right, as you deflate your currency so that you can spike your markets, that gets an ABC structure downside already done. Right, so we're probably going to see this try to edge up. That will bring their market back down a little bit, and then you'll probably see the same thing continue. Looking at this a little bit longer term, right, goes up, test, can't get over, it can't hold over the highs, and bring it back even farther. This thing has been devalued forever. That's why I call it kamikaze QE. They're devaluing this thing. Right now, you're down 50 points off a 127 base. Right, 50 points off a 127 base. That's 40% almost. That's the kind of devaluation you've already seen. And for Mr. Abe over there, that's not enough. They need even more, right? It's insane. It's insane. Yet it goes on, and the kamikaze QE it hasn't stopped. Probably isn't going to stop anytime soon, and it can't. All the marbles are on the table. You can't let it fail, right? You got to make it work. That means you throw everything you got, Texas Hold'em, you're all in. That's the way it sets up. You flip it around, you look on the other side here, you got the dollar. The dollar goes up, it tests in that swing point high. It's kind of hard to make sense of the volumes on these ETFs, unfortunately, but you did hit it with more volume. I suspect this thing's going to try to get higher. And finally, if I go look at the euro, because the euro is the one that's going to be the most interesting in terms of whether or not these markets really start to push the dollar higher. And so if we pull up the euro and take a look at it, right now the euro is trading at the bottom of the Draghi bar on a daily basis. So we got this bar here, and you're right there, right? So you're right down there. You're going to try to test into it. But it looks to me like it's going to hold range for a while longer. So euro holding range. The dollar's basically, gravitating towards the upside, but no real big spin. The yen is the one that took the hit based on what the central bank wanted and did. So that leads us to the part of the show where we talk about what's probably next. And as part of that, I'm going to incorporate a little bit of that teaching that I've talked about and said at the top of the show I'm going to try to incorporate into most shows if possible. And tonight I'm going to talk about just one thing, and that is swing point highs and swing point lows. Swing point highs and lows are marked on the TA Today charts based on whether or not a high has been made or a low has been made, and I can get into the algorithm on the next show. But essentially an H tells you it's a swing point high, an L tells you it's a swing point low. Why are those important? Because that's how trend is determined. You can't get a trend change unless a swing point high is broken, like this one. That's a change. Or a swing point low is broken, like this, and that's a change. You can see the change in trend. Went from bullish to bearish, and then you can see all those trend changes, but they're all based on swing point highs and lows. We'll get into the algorithm on the next show. As far as what's going to happen next, let's talk about where we're at, and let's take one viewer question first, which kind of plays in to where we're going next. So when we look here at the USO, and the viewer question has to do with oil and actually one of the oil stocks. USO has been tracking pretty well with the WTI over the last couple of weeks, so I'm just simply going to use it because that was the one that they had pointed out. You got an ABCD structure. ABCD structure takes you up to about there. You can figure that ABCD structure just looking at the bottom price here, 7.92, and then you look at this price, which is 9.29. That's a difference of about, what, $1.37. Take $1.37, add it to the bottom of the C point here, which is 8.54. That gives you almost $10, right? $10, where is it at? Well, it's up there almost at $10. 9.86, 9.88. $10 is right overhead, and right above it, you've got a bearish retest regenerate zone right here off that prior swing point low. If we do get up into that area, in other words, if this overshoots in oil, and some of the commodities are pretty good about overshooting, if we get up and press up into that area, then you would actually have another indicator there that says, hey, this is probably going to come back because that probability up there is pretty high. If you take and make, and in this case you can, another ABCD structure, it will take you up into that area right there. And so I suspect oil has a decent chance of making this run. It may get a little bit more of a pullback first, but it's got the momentum going. Volume's not great, but it's got the momentum going. And now that the market isn't on its face completely, and it's getting a little bit of lift, and supposedly we're going to get a little bit more demand and all that kind of stuff, maybe oil can make that little bottom run, or that run off the bottom up into this area. And so oil, if oil goes higher, right, that's kind of a good thing, because this market for so long has gone down on the whole idea that we're going to get bankruptcies in all these various oil drillers and companies, right, because oil is just falling through the floor. And so when I look at it from that perspective, near term, oil holding some sort of a range, maybe pushing higher, is probably a good thing. And so this market's probably going to benefit from it at the beginning, at least, because those bankruptcy concerns are appeased to some extent. As far as the particular stock that this gentleman was interested in is OAS. It's a petroleum company. Okay, I don't see much here, really. I mean, if I'm looking at this, you've already had one retest, so on the test back, right? So I'm looking at this bearish retest regenerate. You had a test of it here already. You'd regenerated lower. You come back up. You get close but not test, and now you're kind of hanging. Now, if oil makes that run, these stocks are going to make runs with it. And this particular one is not that strong, but it could make a pretty good run up to these swing point highs. Do I like this one? I think there's others that are a lot better than this one. But I think all the oil stocks, if oil makes another push up to that bearish retest regen, I think all these oil stocks are going to get more lift. And so I think that whole space is a space to be looking at. I've already told members that. I've cued them in on that a good week and a half ago. I pointed out some stocks that I thought would be primed to make some runs. We made almost a 20% run on one of those already. And so, yeah, I think it's a space that you can make some money in, and that's probably what you're looking at. As far as where the market's going to go, if oil moves higher, that's going to help. If the dollar doesn't break out, that's going to help. If we look at those ABCD structures that are in place, on the NASDAQ, on the S&P, even on the Russell, right, those ABCD structures have another percent and a half, 2% to go. And so, yeah, you can make those runs. You can make those runs up here. That makes sense. Swing point low up above, yeah, I suspect it can get to this area before it's over. And it may do it in a, another stair-step fashion. But that does look like, after this huge oversold, fast press to the downside, now you're finally getting the bounce, right? You left volume at the bottom. That's a bad thing. It says you're probably going to come back down there. So, longer term, you still got problems. Short term, yeah, you can bounce some more. And they got a nice big bounce. And they got the momentum. And they're going to try to run with it while they can. That's it for tonight's show. Thanks for joining me. Tell a friend, tell two. Share this, right? Go on YouTube, share it. Share it on your Twitter. Share it on your Facebook. There's ways to do that. It's real easy. And spread the word. I'd appreciate it. Take care. I'll see you next time. Good night.